So we're going to start from a risk management basis. Then we're going to talk about the exposures that you face within your company and how you buy insurance coverages and what the insurance side of things goes from it. So a riveting topic. I know you guys are excited here, so we'll get into it. I want to first show you this picture here of my background. That is me. I was an arborist for a municipal forestry department for a little bit right out of college. This was 20 some years ago now. You can see the hard hat and the double rope technique and probably just not great gear, but that's just where I came from. So I haven't done it as much as most of you guys on the call here, but I have been up in the tree. We have worked with the machinery and that, and a lot of what we do with our business at Arborisk Insurance comes from the background of being in the field and understanding the equipment and understanding the exposures that you guys face every day. So that's where we're going to be coming from. I always like using this picture. I think it's funny. I laugh at myself with it too. So um, let's talk about the agenda today. We're going to talk in kind of general terms about the different legal entity types that you can use to set up your business. Clearly, the first foundational part of your business is how you're established as an entity. So we're going to talk about that. We're going to walk through the risk management process. That is really going to show you the mindset of how we're going to focus on reducing your risk in your business to having less incidents, less injuries, less accidents, and therefore, being a more profitable company. After we talk about the risk management process, we're going to go through the areas of exposure that I try to simplify it for you so you can start thinking in your company what that means from what you're exposed to. And then lastly, we're going to talk about insurance coverages. What does that mean when we talk about our areas of exposure? How do we protect ourselves from buying an insurance policy? Ultimately, you guys work hard. You work hard every day. I want to help you understand how to properly protect all the effort, all the time that goes into, making your business, starting your business, growing your business, and keeping it in business. It's a lot of work. So that's where we're coming from. And if there aren't any initial questions or anything that Jesse wants to add on the start, we'll just jump right into the common legal entity types. Now, when I say legal entity types, we're going to talk about the following four different types. Most people, when they start out their business, you don't establish a company yet. You just operate as a sole proprietorship. Essentially, what that means is everything you do, you're doing under your own name. You're going to maybe file business tax return, maybe not, but everything you do is directly under your name. This is how most tree services start. It's when you get one side job, you just go out and you do it for your neighbor, or you go, across town and do it for a relative or a friend or whatever that may be. The sole proprietorship level, there is nothing formal. There is nothing that allows you as the entity, the individual, to protect yourself from your personal assets to your business. So I want to start there by saying the sole proprietorship is something that can be troublesome if there is an incident, if we damage some property, if we injure someone. If you're set up just as a sole proprietorship, meaning you don't do anything legally on the business side, there's more exposure there. We'll get into that. The second most common legal entity type is called a partnership. And partnership is very similar to sole proprietorship, where usually there's nothing formal set up, where there's not a legal document at all, but it's you and another person, or three people, four people, whatever it might be. Nothing legally set up. There's no contract between you. There's nothing that was sent to either the state that you operate in or the federal government from a taxing standpoint. And partnerships actually concern me even more from a risk perspective, because now it's not just yourself that you're putting on the line. You're relying on someone else, your partner, to do the right things, to not injure someone, to not cause a mistake, to, handle your customers the right way and everything like that. As a sole proprietorship, it's just you. I'm more open to taking on risk if it's just me. But if I have a partner and I might trust that partner, but it's not me, there's that level of disconnect still that creates a little bit more exposure to you. So if we go a little further, the most common entity type that we see for tree services are LLCs, limited liability companies. These are registered in the state that you operate. You do have a separate set of business books, business checking account, business taxes that you file. At some point, you should be, registering your vehicles and buying equipment in that LLC name and all of that. So limited liability company is what it says. It limits the liability to your business and really protects your personal assets from being attacked if you cause an injury, cause an accident. So limited liability, they're easier to get it established. There's less, I guess, management information that you need to do, less upkeep from the state and federal government perspective. So in the state of Wisconsin, where I live, LLCs, I think they're like $160 to get started. And once you get it started, then you operate, everything should be done under that LLC. Your contracts with your customers, employment agreements, once you get to the employee level, everything should be done under the LLC. The whole point of it again is to, if there is an issue, your LLC is the entity that the attorney goes after, not you as an individual. Jesse, do we have a question on that?
Quick question. In the Q&A, we have one. What would you do when you operate your LLC in multiple states?
Yeah, great question. So operating in other additional states or multiple states, there's not that much different other than you got to make sure if you have employees, what is the workers' comp law in that other state? You need to make sure from a taxing standpoint, are you subject to sales tax in each state? And really your insurance policy, when we talk about that, most insurance policies will you'll allow you to operate across state lines, but you do want to check on that from your general liability and business auto perspective. As a legal entity, whether you operate as an LLC in multiple states or the single one, that really doesn't matter. What matters most with an LLC is that you actually do all your business under that LLC and you don't have certain contracts or certain piece of equipment in your personal name, because that's when, if you've heard the term piercing the corporate veil, what happens then is you've set up this entity, an LLC or corporation, but you don't operate everything through that. And you do some, commingling of your banking accounts, or you buy something personally with the business account. You do other things that kind of blend that together. And if you don't truly set it aside, LLC, corporation over here, personal life over here, and there's a bad enough accident, attorney can jump in and sue you or try to pierce that corporate veil and open up your personal assets. So it is very important to operate. If you have the entity set up, you did it for a reason, operate that way. Don't allow it to cross-reference or bleed into your personal assets, personal life at all. But multiple states, to answer that question directly, shouldn't be much different other than making sure that you're from a taxing standpoint, from a work comp standpoint, employment law, that you're doing things the right way. So hopefully that answers your question. The last common entity type is a corporation, and corporations are a little more solid, a little stronger of legal protection for the officers of the corporation. There are different reporting criteria with corporations. So our insurance agency, I purchased it with my brother. So we're 50-50 owners of the corporation, but it is an S Corp. So we are a corporation. So we have to have annual meetings. We have to have board of director meeting minutes that we have for our meetings. So it's a little more paperwork, but it's a really good foundation to separate our personal assets from the business. Jesse, go for it.
Can I buy personal items from my LLC bank account?
You can buy items for, wait, I'm sorry. Can I buy personal items from my business banking account?
Yes. Like for instance, a vacation.
So I would strongly advise against that unless you're personally reimbursing the business. Okay. If you personally reimburse the business and you're doing it because the credit card of the business has better mileage points or, reward points, fine. That's one thing, but you have to account back for it that your personal life, your personal family, your personal finances are actually paying for that expense. That's where if you have those overlaps and an audit comes in or there is a bad accident and attorneys are digging everywhere, if there's some of that that bleeds over, that's when you could get into the trouble of having the corporate veil pierced, as they call it. So you be very careful with that for sure, and make sure that if it is a personal expense, it's actually paid for ultimately by your personal assets. Great question though. And again, this is a high level dive into legal entity types, right? And I should give my disclaimer, I'm not an attorney, but what we're talking about is the basics of setting up the legal entity. And I start this whole conversation with it because this is the foundation. How you set up your business, how you operate, dictates everything else that we're going to talk about today. Um, One thing to note about limited liability company, LLCs, and corporations from a workers' comp perspective, each state operates a little differently, but on the whole, the majority of states will say members of the LLC, owners of the LLC, are automatically excluded from work comp. So if you only have members of the LLC that are working, if you have three of you and you all have a membership ownership in that LLC, chances are, and you got to check with your state, but chances are you don't need workers' comp. If you have three members and one employee, chances are you're going to need the workers' comp for that one employee. Now, on the corporation side, workers' comp is usually flipped, where you're automatically, as an officer of the corporation, you're automatically included, and you can exclude yourself if you don't want to have coverage, you don't want to pay for that. So we can dig into that when we get to the workers' comp piece of it later. But do want to mention that the limited liability companies and corporations act a little bit differently and state specific on who can be and who is not in or out from workers' comp perspective. Cool. If there's other questions about this, certainly ask. We can come back to it. But again, that's the foundation that I wanted to start from because it really sets up, I think, everything that happens with your business. If we start now talking about the risk management process, this, if anything that you get out of today, I want you to understand that insurance is not risk management. Insurance is part of risk management. And I think why I stress that is over the years of working with tree care companies, a lot of people have told me, I've got insurance, I'm covered, it's going to be fine. And to some extent, they're probably right, except for the fact that the concept of risk management is trying to do something before it even gets to insurance. We want to manage that risk, manage your exposure, so you don't have to have an insurance policy pay for the damage, pay for the injury, pay for whatever. Obviously, we need to have insurance because there are certain things, which we're going to talk about in a little bit, that get too expensive for us or have the potential to get too expensive, and we buy insurance to help with that. But insurance is not risk management. So that's the main point I want to have you take away for today, if nothing else. So the process is pretty straightforward, and you guys as arborists do this every single day on every job. But it starts with risk identification, right? Identifying what actually is there could go wrong. Once we have identified what the risk is, we analyze the risk. We say, how severe is this going to be? And I'm kind of being technical on this, but this graph kind of helps. Where severity is across the horizontal and frequencies on the vertical axis of this. Anything in green is something that you probably not a major concern, but something in the red or orange can have a big impact on your business. If you think about a serious auto accident, you're driving down the road with a big truck. If you injure someone else, get in an accident, injure, kill somebody else, that could have a severe impact, right? A big dollar figure. And it's fairly likely. Auto accidents happen all the time, right? So you're in the orange to red with an auto accident side of things. So when you're looking at analyzing the risk to your business, you don't need to break out this chart every time, but just think, if something goes bad, what are the ramifications of it? And if it's something on the low end, well, maybe we can manage that. Maybe we can figure out how to reduce that. If it's on the high end, we can do a couple things, and we're going to talk about that next. But Jesse, you have a question?
Yes, sorry. There were a couple of questions. One, would you mind sharing the source for this chart?
Yeah, it was a certified risk management course that I went through. I could get it to you, Jesse, afterwards.
I'm happy to share it in the follow-up email. I always send a
Yeah.
link to the recording, so everyone will get that afterwards, and I'll send the source for the chart as well. And then the secondary question was, would you consider insurance as a mechanism to transfer the risk?
I love that. Who said that? Because they get a gold star.
That was Kunyu Zhang. Thanks for your questions.
Yes. Awesome, awesome, awesome. And that's absolutely correct. Because once we analyze it, we're going to control it somehow. And why I say insurance is not risk management, it's because it's a part of it. When we talk about controlling the risk, that is one way to control it. Transfer it to somebody else. Absolutely. Great point. Uh, let's see. I don't think I have too much more on that in the screen. So controlling the risk simply means, what are we going to do with it? Are we going to stop doing it? Is it I'm in Wisconsin, so you guys just had in Georgia had all the snowstorms and ice storms. We have snow all the time, right? Are we going to stop doing snow removal, snow and ice removal because it's a high general liability exposure? That's controlling risk. We're stop doing it. Are we going to put training in place so our employees can plow the customer's driveways better? That could be a control mechanism. Ultimately, when we're talking about controlling the risk, it's who's going to pay for it and how is that going to work? And that's where insurance comes into place. So you teed me up great, because if we transfer the risk, that's where insurance is. You're going to pay a small premium for the insurance company to take a bigger chunk of that. Think about your personal car insurance. You pay, it might feel like a lot, it probably is a lot, but you pay in the relative term to the policy limit a small dollar figure, with the promise that the insurance company is going to pay, $500,000 on top of that, or whatever your $1 million liability limit is. So financing the risk is really, how are we going to figure this out? If we look back at this chart, anything in the greens, you might want to self-insure that. If it happens, we're just going to pay for it. If we damage the corner of that gutter, we're just going to pay for it. It's frequently happen, but it's a low, negligible cost, or maybe a mid-range cost. We're going to eat that. We're going to retain that. We're going to pay for it ourselves. Again, if the tree goes through the roof of the house and that's a bigger cost, we're going to transfer that risk to the insurance policy on our general liability. So that's how I like to look at the risk management process. The last technical term for the risk management process is the administration of the plan, but basically, like any tree risk assessment, we come back to it. We want to make sure that it's working. We analyze really what we're doing, and if there's more exposure that we're feeling, or more exposure that we've seen, or incidents happen, we want to make some adjustments. You have an injury at the job, you don't want that to happen again. You make risk management decisions to do other training, to get other equipment, to avoid doing that type of work in the future. All those different thought processes that you go through are part of risk management. So hopefully that's fair. And again, a high level description of the risk management process. And it sounds more technical in this and looking at that graph than it really is, because you guys, like I said, you'll do this every day on every job you get to. You'll look at the tree or the yard, the property, you'll see any potholes, you'll look for mushrooms, you'll look for crown dieback, you look for all those different things. You're identifying the risk. You're assessing, okay, the tree's, 30 feet away from the house or the property, the building, whatever it might be. And it looks like it's got a slight lean towards the house. So we're analyzing the severity, the risk. What do we need from an equipment standpoint to get this tree down, or to get the branch off the house, or whatever it might be? that's when we're controlling the risk. If we're going to use the right equipment, we bring in our grapple truck, whatever it is. And then ultimately, you know, when it goes right, we can take note of it. If it goes wrong, we take note of it, and then we make adjustments. Cool. So the areas of exposure, this is what I teach to our clients, and I think is the easiest way in my brain to figure out, how do I look at my business and how do I actually see if, you know, I'm covered, or at least thinking about the exposure that I have. We're going to go through 5 different areas, and I've tried to keep it fairly simple. But the very first area we're going to categorize as other people. And this is because this is what people come to me for most of the time. It's general liability insurance. But what they're asking for is, how can I make sure other people are protected if I screw up and I injure them? So the areas of exposure with other people are simply the fact of, you're operating your business, other people could get injured, their property could get damaged, they could sue you for something your employees did, something your employees said, whatever that might be. Other people are probably, I think, the biggest source or the second biggest source of exposure to your business, because there's a lot of unknown out there. So when you're analyzing other people in your business, the exposure there, think about, what jobs are you doing? Are you going to be working for private landowners? Are they going to be working for municipalities? Are you going to be in the public setting? Or are you going to be in the back 40? Are there going to be a lot of interaction back and forth with other people? Or is it going to be pretty hands off? All of those questions and all of that thought process on what you're going to be doing or are doing within your business determines kind of your level of exposure from other people. Hopefully that makes sense. The second biggest, or some people would argue the largest exposure, it would be your people. Now, this would be certainly your employees. It could be your contractors. It could be anybody that is affiliated with your organization. If we're talking about the Georgia Arborist Association, it could be your volunteers. So your people has a big impact. How do they, if they get injured, if they cause an accident, if they feel disgruntled or feel discriminated against or are discriminated against, right? An employment lawsuit could come against you. So your people is also a big area of exposure. I think it's in number 2 position because you can control this to some degree. Other people, there's a lot less control because people could come after you for all sorts of reasons. At least your people, you have a little bit more control on. But you have to think about that. Your people, the people that are associated with you, what could go wrong? Could they get hurt? Could they cause injuries? Could they sue you? Could whatever happen, right? The third area, just make it simple, your stuff. This would be your equipment. The actual backpack that you show up with on the job that has your rope and your harness and your PPEs. It could be your chippers, your stump grinders. It could be anything that you need to get the job done. The computer that you're listening to this webinar on. It could be your building, your property that you operate out of. That's what we're talking about with your stuff. So think of the physical asset that you have. One thing that I think people miss in this idea of your stuff is your income, like the business income. That is your property of your business, whether it's accounts receivable and or future business income that you can get or need to get from work that you did or going to do. That's all part of your stuff in my mind. So thinking through that aspect of what from your stuff, what could go wrong? Could it get stolen? Could it get damaged on the job site? Could it burn up in a fire? All those different potential pitfalls of your stuff. More specific, and I put this separately, your vehicles, because the vehicle, I really believe, auto exposure for your business, being on the road, driving down the road, going to and from job sites throughout the day, with the type of vehicles that we use in this industry, is probably from a liability perspective, one of the largest areas that we see for tree care companies. So your vehicles, I've separated it out, and I also want to make note here. I've alluded to it early, right when we're talking about entity types, but when a lot of companies are getting started, you're driving your personal vehicle, right? If I start my company, I don't have a business, I don't have a business vehicle, business truck. I'm just using Eric Peterson's truck. So even if I set up an LLC to do the work, say, I don't know, Peterson's Tree Service LLC, right? But I'm driving Eric Peterson's truck to and from the job. If I get in an accident, they're going to sue, and it's bad enough, right? And an attorney gets involved, the plaintiff's attorney gets involved. They're going to sue Eric Peterson Tree Service because clearly I was going for the work. I had all my gear in the pickup bed or whatever it might be, pulling a chipper. And they're going to sue Eric Peterson because I was on the title of the vehicle. So your vehicles present a large exposure to yourself. And if you are having employees drive or subcontractors drive, that's even more of a concern for me if you have your vehicle in your personal name. So there are times and reasons why you need to do that when you get started. You might not have the financing capability because the business doesn't have any credit. So be it, that's okay. Just know that you're bringing your personal assets into the mix in that situation, and you want to get it out of the personal name and into the LLC as soon as possible. Now, going back to the question about the counting and how paying for things that way, you do want to have a lease agreement between your LLC and your personal self, which helps bring the liability back to the LLC. And it then establishes an actual relationship with money transferring back and forth. Talk to your accountant on that. So there is no concern about piercing the corporate veil from that perspective because you've documented it, you've addressed it. And then once you get to the fact of, or the time that you can get it into the LLC, get it in the LLC name. Hopefully that makes sense. The last area of exposure, and unfortunately, it should be the first area if you are the business, we need to talk about yourself. So many people, myself included, you put yourself last. You don't think about what happens if you get injured, if you are the business. How are you going to continue, climbing up the tree? How are you going to continue doing your consulting work? How are you going to continue to do what you need to do if you yourself are injured? So we're going to talk about insurance coverages for that, but certainly you want to think about what could happen to yourself. And if you do get hurt, where does that leave the business? So try to simplify those five areas: other people, your stuff, your vehicles, yourself. I guess sorry, I had more slides on each one of these. So this is a slide from when we're talking about your people. I just pulled these two pictures. These were the employment law posters from 2003 when I started the insurance industry until now, 2025. And you can see there are a lot more words in the 2025 employment poster. Things are smaller and everything. And the fact is, the employment laws are always changing. So you need to either have a good partner and a good feeling on the employment laws that are in your state and at the federal level so that you can try to follow them as best as possible. But yeah, we talked through all these individual stuff. So again, that's the overview on the risk management process and the way I like you to look at the areas of exposure. Are there questions there, or you want to pause there or keep moving through?
I think you already answered this question, but it was in the chat. Can I switch my personal truck under a newly formed LLC?
The generic answer is absolutely yes, and you should, but what we don't know and what you would find out is if you have a lease or a finance, a loan on that vehicle, the lender may not allow you until you pay it off and or reassign the loan to the LLC. So that's where the question would be, but certainly if it's paid for, it's free and clear of the title. Yeah, I would go I would go as soon as you can to get it retitled. You're going to pay a retitling fee. You'll have to get new plates probably, but you're going to eliminate that liability exposure off your personal assets right away. Many people will wait till the registration is up and then do it at that time, so they're not paying twice. But you're gambling with extra time at that point. So yeah, check if there's a loan or a lease, you got to check with the lender. If it's free and clear, go for it. Do it right away. It would be my recommendation. Cool. Well, then we're a little over halfway through, so I want to talk about the insurance coverages. And this is usually where we get more conversation questions. You guys have been great already with questions and please ask away. But I'm going to go through some of the main types of coverages that we talk about. We've already said some of these words, but hopefully this just kind of puts a little more parameters around it. When we talk about other people and how we can insure against, again, insuring is a transfer of risk. So we're going to pay a small premium for a large benefit from an insurance company. General liability is the main policy that people, or that tree care companies will buy to protect against other people. General liability pays for injury and property damage to other people. So again, you're on the job site, you cause an accident to happen. Maybe you're at a residential property and the toddler runs out the back door and runs underneath your tree, and unfortunately you drop a branch on him. And at that point, you're going to be responsible to pay for some injuries, right? Hopefully only injuries with that scenario. So the general liability does pay for that, and it's based on the concept of negligence. Now, negligence is a legal term, but it's basically determined in the court of law on who was at fault. So if you hear someone say, well, I wasn't negligent, or I was determined that I wasn't negligent, or it was determined that I was negligent, it's essentially meaning who was at fault and therefore who takes responsibility to pay for the injuries, the damages, whatever that might be. General liability is the most common insurance policy that we write because when you're going to get a job, people will want to know that they have coverage, that they're going to be covered if you screw up. So it is the primary coverage policy that the tree care companies buy just simply to do work. I don't know that it's necessarily the end all be all for you. It's not. We're going to go through the other ones, but it is something that I want to address and make sure that general liability, I think we all kind of know the parameters on it. Now, there are some nuances with general liability. The very first thing is there's usually a per occurrence limit and then an aggregate or per year limit. Most policies are 1 million per occurrence, 2 million per year. That means you could technically have two $1 million claims before your policy is run out of coverage. That's the general, or that's the most common setup for a general liability policy. General liability policies are typically rated upon payroll. And that means if you have more payroll from your employees or cost to subcontractors, you're going to be doing more jobs. You're going to have more exposure to injuring other people, damaging properties. So therefore, your insurance cost is going to be more expensive. That's how general liability is set up. One last thing to talk about general liability. When the general liability policy pays for property damage, they pay what we call actual cash value. And I want to take time to explain this because it's a common, I don't know if misconception is the right word, but it's a common area of confusion. So for tree care companies, when they actually cause property damage accident. So if I'm on a job and I do drop a branch and it clips the corner of the gutter, maybe some shingles pop off, and it's not a major deal, but it is a significant amount that I'm not going to cover it on my own. I'm going to ask the insurance company to pay for it. The general liability is based off of the concept of indemnity, meaning it pays to put the customer back in the place they were before the incident. If my customer's home had a 20-year-old roof on it, they're going to pay what the cost is for a 20-year-old roof. They're not going to pay for a brand new roof. And I think that's important to note, because the customer is going to expect a brand new roof, right? They're going to expect you to redo everything. When legally, all you're responsible for is getting them in the same condition that they were before, which was with an old roof. So whenever you do have a significant property damage accident, the conversation needs to happen with the customer and talking to them about how your policy is going to respond. And unfortunately, legally, that's all you need to do. Morally, we all feel we have to do more. So that's where the open communication needs to happen between the customer and the tree service to make sure that they all understand what could be, a remedy here. A lot of times, if it's a big damage to a residential home, we will advise the tree care company to have the customer file a homeowner's claim if they have replacement cost on their policy. Therefore, they get a new roof or new siding or whatever, and then that insurance company for the homeowner's policy subrogates or goes after, sues, whatever you want to call it, gets paid back by your general liability, because the general liability is not going to pay to put them in a better place than they were, meaning a new roof, a new siding. It pays to put them back in the place that they were at the time of the incident. So that's something that is a confusing part, and we always talk to tree care companies about it, because you should know how that happens when their claim time comes. If it's a claim, if it's an accident, it's a property damage, they're already, tensions are high, emotions are high. You want to make sure that you don't make it worse by relying on the insurance coverage to only pay them the current value. So hopefully that makes sense. General liability, most common policy that we write. Workers' comp takes care of your people, right? Workers' compensation is the sole policy that pays for injuries to your employees. In most states, this is a sole remedy, which means it doesn't matter how they get hurt, your workers' comp pays. If as long as it was on the job, your workers' comp pays. Workers' comp could go after whoever was responsible. If it was another contractor or whatnot, that's fine. But the primary coverage to your employee is workers' compensation. And there are four main benefits to workers' comp. One would be the medical bills that you have to pay because of the injury. Two are your lost wages. If you can't work or you can't do the job that you were doing before, and now you're losing hours and or you're getting paid less because you're doing a more remedial task than actual arboriculture work, the workers' comp pays that difference in lost wages. It also pays a rehabilitation cost if you were unfortunately amputated, you lost a limb doing tree work, and now you can't do tree work anymore. The policy will pay to give you schooling and rehabilitate you into another profession of equal pay structure. And the very last thing is it does pay a death benefit to your survivors. Unfortunately, we've had to go through this a few times with people we insure and employees of our companies. The death benefit that workers' comp pays, it's all set by each state. It's not a lot. And it only gets paid if you actually have a surviving spouse or dependent children or dependent parents. It doesn't pay if it's just a single employee that doesn't have any dependents. So it is a benefit that's paid, part of the workers' comp policy, but there are boundaries or guidelines with that. So workers' comp, the way workers' comp gets paid, or I'm sorry, the premium that you pay is based off of payroll again, just like general liability. So the more payroll that you have, the more chances you're gonna have an accident, the more premium you're gonna pay. The last thing I want to mention about workers' comp is what we call an experience modification. So once you get large enough, you can earn a credit or a surcharge on the premium that you pay based on your past injury claims. So making sure that you do have things in place from a risk management perspective on how to handle an injury, how to keep that as low as possible from a cost standpoint, getting the employee back to work, making sure that they're getting paid from you, not the workers' comp company. All those different things are risk management processes, procedures will limit the exposure that you have to workers' comp from a cost standpoint because your cost will go up if you have injuries or accidents once you get the experience modification. In most states, that's after 3 years of having a policy with a premium over $7,500 each year. So a small startup business that doesn't affect you until you get above that. Property insurance policy covers your stuff, your buildings, your equipment in the shop, any of that type of stuff that you actually want coverage from a theft, from a building burning up, from a tornado, windstorm. Flood policies can be purchased there to cover your property. So the property policy is probably the least common with tree care companies because yeah, you might have a building, but it's not like we operate out of that building or we don't make our revenue there. We make our revenue at the job site. General liability, that's why general liability is more prevalent. We're not a manufacturing company where we need that building. We're not a retail store where we need that building. But property policy is something that does pay for or what you would buy to protect those exposures. Jesse.
Yes, we did have a quick question. Does experience modification start at $75,000 a year premium or 75,000 a year gross receipts?
Thank you for clarifying it. If I said 75,000, I'm sorry, 7,500, 7,500. Depends on the state that you're in, but most states you have to be over 7,500 in premium for 3 years before you get an experience modification. In most states, depending on what the rate is in your state, that usually is about equivalent to having 2 or 3 employees, if that helps put in perspective. You have 2 or 3 employees for more than 3 years, you're probably going to get an experience modification. Another insurance coverage that you can buy is called inland marine for your stuff. Now, inland marine is a weird term, I guess, but inland marine is essentially the policy that covers your equipment wherever you go. It dates back to marine insurance, back when the colonization was happening. The Lloyds of London, you may have heard that. They started issuing insurance policies on marine policies for the ships that were coming across the ocean. If the ship went down, if it was pirated, whatever, that marine insurance policy would pay the owner of the ship or the merchant who sent the goods on the ship. So they ran into issue when it got on land, and now they're moving it from town to town because the only peril, the only part that was covered was when it was on the water. They just named it inland marine for when it's on land. So inland marine is what us insurance nerds use for your equipment. But that, is where you definitely want to list the equipment that you would want insured from a theft, from a damage on the accident standpoint. But that's inland marine coverage. Jesse.
That's another quick question. This person has volunteers for a nonprofit 501c3 tree planting event. Would general liability apply to volunteers?
So, great question. The short answer is yes, for the damage or injury that volunteers will do to other people. So if your volunteers are digging the trees, the holes for the trees, and they hit a fiber optic line, your liability, because you would be negligent, your organization would be negligent at that point, perhaps, unless those mismarked by the utilities. There are other things that come into play there, but let's just say they screwed up and they dug in the wrong spot, hit a fiber optic line. Yes, your liability is going to cover the operations of your business, your organization. Now, from a workers' comp perspective, they're volunteering, they're not getting paid. So if that was a gas line and an explosion happened, they got hurt or killed, workers' comp isn't going to pay for them because getting paid by you. There are policy endorsements that you can get to include volunteer workers on it, workers' comp, but then you have to assign a payroll dollar to them. So it's just most of the time that doesn't happen. So short answer is general liability. If they cause injury or damage to other people, yes. Injury to them, not being an employee, no. Business auto is the coverage for your vehicles. We've talked about this a fair amount, but it is a separate policy. And the other thing to note when if you have a personal truck that you're using for business use, make sure your policy does say it has business use on it. We have seen plenty of times where personal auto insurance policies, if I'm just driving my personal truck to do a side job, but it's not listed for business use. I'm getting paid for this job. I'm not doing it on my free will. And I get in an accident, and it's a bad enough accident that people get involved, attorneys get involved. Your personal auto policy could deny that claim, could not pay for anything because you're using on the job and they didn't know you used that truck or that vehicle for on the job type stuff. So if you're using that, you have a personal auto policy, make sure business use is listed. It shouldn't be a big deal. It might add a few bucks, but it covers you for any business. Otherwise, you get a true business auto policy. And certainly when you have an LLC, you're going to do that. But the business auto policy is just that. It's a separate policy that covers your vehicles, covers the liability going down the road, and all of that. And then on top of that, to kind of bring it together, you've heard about umbrella policies. They're called umbrella policies because they sit above all your other liability policies, and it acts as an additional layer of protection, essentially taking your general liability and your business auto liability and raising it up 1 million, 2 million, 3 million, whatever that might be. It gives you protection for the bigger lawsuits. I mentioned this on yourself, but we're talking about health insurance, life insurance, disability insurance. Those are for your employees. Those are for you as yourself. Those are coverages that we unfortunately at Arborist don't get into, but are very important. And we have partners that we refer people to, but it is something that really can help bring in the overall health and I guess culture of your business if you're protecting your employees and taking care of yourself from those policies. Jesse?
Yes. So is an umbrella policy on yourself or on your business?
Great question. Umbrellas can be both. So personally, I have an umbrella policy for myself and my wife and our 2 cars and our home. When we're driving our personal vehicles, if I get in a bad accident, I have my personal auto policy is 500,000 limit, and then I have a $2 million umbrella, so I have $2.5 million of coverage to other people if I damage or injure them. On the business side, it works the same way. Our agency has $1 million general liability policy with a $1 million umbrella, so we have $2 million there. In our situation as an insurance agency, we don't have vehicles, we don't have anything beyond that. We're not doing field work like an arborist is. So the general liability exposure and the business auto exposure that we have is a lot less than what you guys have. Nonetheless, we definitely have one on our business as well. So it's both. And really, when you're talking about the limits of coverage, that's where you want to think about the overall operations. What type of work are you doing? Who you're working with? Where are you working? Analyze that coverage or that exposure aspect, and then think about how much liability limit am I able to purchase? So you can and should get quotes on different limits of coverage to decide how much coverage you want to buy, because everyone's going to be at some point priced too high. You can buy insurance for everything if you really want to, but I don't recommend that. I recommend making sure that it sticks within your budget and you understand what you're covering and what you are then self-insuring above that. Cool.
Thank you. One more question. Is general liability different from professional liability insurance? For example, which one would be better suited for a consulting arborist doing tree risk evaluations?
Yeah, I flipped through because I didn't know if I had professional liability listed, but Professional liability, errors and omissions, they're one and the same as far as how they operate. They're just said a little differently. Errors and omissions, professional liability, medical malpractice for doctors, all of those type policies pay for the advice that you give, not the work that you're doing. You're not physically touching the tree, but they pay for the advice that you give if you make a mistake in the diagnosis of a tree, pest problem, disease problem, if you make a mistake in maybe not talking about one of the trees in the backyard because you got brought in to talk about a tree in the front yard, and now the backyard tree fails and injures the neighbor's fence or dog or whatever it might be. And they say, well, you were on the property, Eric. You should have known better. You should have told me. Professional liability takes care of all that. So if you're a consulting arborist, you absolutely, in my opinion, need to have professional liability. But again, yes, professional liability or errors and omissions are one and the same thing. They operate a little bit differently than general liability in the fact that you have what they call a claims made policy. So you have to keep coverage in force to get retroactive coverage. So once you start a policy, you want to make sure you continue it so that you have that coverage for your past consulting work or past jobs that you've done throughout, as long as you're operating the business. But yes, great question on that.
I'm going to hold some of these questions because we really only have about 5 minutes left, and I'd like for you to get through your presentation. One quick question though: does errors and omissions cover salespeople, like employees?
Yes. So every tree care policy that I want to write for my clients has professional liability built in, because every job I've you saw that silly picture of me at the beginning. Every job, I know this, every job has an element of consulting in it. You are hired as the expert, whether it's just to remove the tree or to prune the branches or to do it, per NCZ or NCA 300 standards or whatever it might be. You're being hired as the professional. So, yes, your salespeople, you're going to be giving advice on what to do, what not to do for trees. Your the certified arborist or just a grounds person that's actually on the job site, they're going to be operating as a professional. So every aspect of tree care, in my opinion, should be covered or does have some professional exposure, and therefore you should have a professional liability coverage in some aspect on your policies. For operating tree services that are doing the physical work, this does a lot of time go right on your general liability. For consulting arborists, obviously that is just separate because you're not touching the tree physically, so you have less of a general liability exposure because your business is your words, your advice. The last two things that I have here, additional coverages. We have people ask about bonds and unemployment insurance all the time. Unemployment insurance goes through the state that you operate in, the workforce development probably, or the Department of Revenue. Nothing that your insurance agent's going to deal with. It's directly between you and the government with that. The bonding, you see people say I'm insured and bonded all the time. Bonds are not insurance. Bond is a way to show that you have the financial wherewithal to pay back an accident or property damage that you cause. Municipal contracts require bonds a lot, and every bond is a little bit different. But bonding, it's really it's not insurance. It's basically you as the business get approved financially for your business financials. And if you can, to see if you financially can pay back whatever the bond limit is. So those are things that you can run into, but typically are not part of the general insurance package that we really talk about. But yeah, we went right up to the edge. It's 3 minutes to go. I'm here. I can stay on even longer, Jesse. I appreciate it. I talk fast, so hopefully I got my message across and you guys understood and heard what we were talking about here. But I'll wait for more questions now.
Thank you, Eric. I think we have time for maybe one or two questions. One is, do you have recommendations and criteria on how to select a professional policy?
Yeah, so the very first thing with professional liability policies, a lot of them will have a box, a description of covered operations. So the very first thing you want to do is when you're looking at the quote for the coverage is make sure that whatever you do for your business, whatever your operations are listed in maybe general terms or specific, however you want to get. So if you're doing tree risk consulting, if you're doing maybe mapping analysis, maybe you're doing inventories, whatever it is, make sure those are all listed in the coverage of operations, covered operations. The other thing you want to look at is where is the insurance company located in? A lot of these policies are what we call the excess market, excess insurance market, and therefore every policy is different. There's no standard policy language. So really working with your insurance broker or agent to understand the ins and outs of each policy is huge because there are a lot of exclusions that are built in. So just taking your time and as a consulting arborist, you know what that's like. That is your nature. So just make sure you get a copy of the policy before you sign up. You can get a sample or specimen copy. But the biggest thing is the covered operations. You want to make sure everything that you're doing is listed.
Something to add to that, just anecdotally, is finding an insurance carrier that is, or agent that is familiar with the industry that you're working in can really help to navigate that process because they're familiar with the kind of questions that you'll have.
Big time. And that is absolutely very true. We do really unique work in the tree care space. And it's exciting on a daily basis for all of us, but the insurance world doesn't get it. There are specific, people throughout the industry, and there's a number of great agents across the country, absolutely, and some insurance companies that get it, but the majority of the time you need to get that agent that can help you understand and interpret and then deliver the message back to the insurance company. Um, so we've definitely had more conversation because the agent understands it than the insurance company. And the insurance companies who ultimately matter because they're going to be writing the check. The agent doesn't write the check.
Well, I think that we're pretty much out of time. I really appreciate you sharing your knowledge and expertise with us, Eric. It seemed to go by very quickly for such a large amount of information. So I really appreciate that. Just as a reminder, I'm putting the form in the chat box for you to fill out. It's a brief survey. Please answer a couple of quick questions for us. I'll keep putting the link in there so it doesn't get lost. Again, as a reminder, this is a continuing series in the business of arboriculture. We will join each other again next month, February 27th, for the next in the series, which is going to be on building your brand and sales etiquette. So I hope that you all will please join us for that webinar as well. Again, if you need CEUs, please fill out the form and I will send out a recording of this webinar to everyone. So if there's some information that you wanted to review in case you missed it, you can watch the recording of it. Or if you have questions, please reach out to me or Eric. My contact information will be in the email and I'll send out Eric's as well. He's going to share with me his PowerPoint presentation too, if anyone wants it, and I'll try to get the source for that one chart in case anybody needs it. So please fill out the form if you need CEUs. I mean, keep putting that in the chat because that is how I submit your CEUs to the ISA. So please make sure you fill out that form. I really appreciate everyone joining us. I'll stick around just a minute so that you have the form link. I'm going to keep putting it in the chat. Again, don't put your ISA certification number in the chat. Go ahead and fill out the survey to submit your name for CEUs.
Thank you, everybody. You had great questions, and to me, it did go flying by. Hopefully, we didn't put you to sleep too fast talking about insurance and risk management, but I appreciate your attention and the questions that you did ask. So thank you very much.
I think that I was putting the form just to only special people, meaning me and the panelists. So I put it in there now. Sorry about that, everyone. You should see it now. All right, great. Thank you so much, Eric. Have a wonderful afternoon, and hopefully I'll see everyone soon.
Perfect. Thanks, guys.
Bye.
Take care.